This is Mayank Janjay, and this would be a detailed video on the Nifty and its key levels, including derivatives data as well. If you want to watch a shorter version of it, that I have already uploaded on the all the platforms, including my Twitter account, YouTube, and as well as Instagram account. So that's a short 2.5-minute video, and this will be a detailed one for those who want to understand more about the Nifty technicals. So if you see here on Nifty, it's just kind of a straight fall happened, after the war started, and on the way it broke a lot of key levels, which include 24,400 first, and then 23,200. We managed to again went up, and break those levels, but again from 23,300 we again start slipping. Right now we're standing at 22800, and today we are seeing a fall of minus 200 more. Why that fall has come? Because the crude prices have gone up during the weekend. So because of a couple of things. One is that Houthis, again rebels have started their fight against Israel, on one front of the country. And the second problem is that that side of of Israel is where we have another route from where the ships pass related to crude and other important items, and that's again the fourth busiest route. So Strait of Hormuz is the number second, and this is of number fourth in the rank of traffic. So that is why there was a concern certainly about how the crude will be shipped from Middle East, and hence the crude prices have gone up by around $10 odd during the weekend itself. Now second aspect, that the reason the markets are nervous is because US has also landed its an army of around 3,500 people. The personals who will probably which may eventually end up going into Iran and try to win the wars for them. So that is again one more thing which probably is an escalating scenario for the stock market. So in that context, what we have to do now? So there's one more level which I want to highlight is, you see here, is this one, which is next support is at 21,800. So what we should do, so somebody okay, so I'll come to that also, but I think I'll explain more the parameters also in detail first. So one is that now with this going down, we are now staring at this, the last support at, now I'm saying last support, but after that the next support is quite deep in my view, which is again around I would say how many points, 3,500 points, which is like 15% more fall in the Nifty level. So that's why I'm a little skeptical on this. So by all probability we should try to defend this, hopefully. If I think as a bull, as a bee, obviously I want to have this smackdown here, and finally if I go there, obviously I'll make a lot of money. So that's why this level is very important. Why? Because if you see this is where the support was. It went up to like 26,500 points. Levels from Nifty again went back down, again went up. So this is where the top is 26,000, and once we basically broke this level, see which is 24,400, the fall was quite sharp and brutal. So the first thing I have to watch out for is basically the previous week low, somewhere I think around on the closing basis, which is I would say around 22,500 on closing basis. I will take 50 points a buffer. So for me, the first level is 22450 on closing basis. That means I should be closing below that if I am a bear, if I think the market is going to go down. If this happens, then obviously I am staring at the level of 21,800 pretty sharply. So for me, this becomes a sacrosanct level to watch out for. On the upside, the level of I would say 23246, I'm adding plus 50 points over there, is 23300 का ऊपर का closing, closing greater than 23300. This is my bull case, So this, so what I've done, I've created a band of 2 to 450 to 2 3 300. This is a case of being bear, this is a case of being bull. So this is my right now level. What if this gets broken? Maybe if I say what if this gets broken, I'm staying level of 21,800. If this gets broken on the upside, then I'm looking at the level of somewhere here, this is around 24,000. So I'll have a nice 600-700 points on either side once this level gets broken. Now if I just correlate this also with the derivative data as well. So for that I'm going to sensible. On sensible, this is my my data on the option side. I'll try to increase a little bit of band here to show you a much clearer picture. If you see here, which is my support level, the support level is 22,000, because that's where the maximum open interest is. On the downside, on the upside, where I have some resistance. I have resistance at first at 23,000 levels, and then at 23,500. So what the level I am watching for is 22,000. I can also keep a track of this put, which is 23,000 put, track of 23,000 call, and 23,500 call. So this is what you have to track now. When it comes to derivatives data. If any of these, if you see, for example, if you see that open interest starts to come down here, that means people are covering their shorts in the put, which would be a negative sign for the market. Somebody who basically see that maybe the same thing, that the open interest starts to go down, that means we are maybe this level gets getting broken and market may try to go towards 23,500. Then we'll watch out the behavior of this particular call. So this is how basically you have to trade in terms of derivative data. So if I combine both of them together, one thing is clear, that the same level, which is 22,800 to 450 is important. So if it starts to go down, then my 20,000 put will start seeing unwinding and it will get hammered down, and then we probably go and touch this level. If it starts to go up from here, we'll definitely just going to see unwinding in the 23,000 call, and then this level basically, this is 23,300, and this level gets opened up. So this is the setup overall for the Nifty at the moment. So what should we do? Okay, we will discuss the 4 major scenarios. What if I am one new Bulani ki, I want to take a fresh position alongside? Then my entry point, as you know, is anything greater than 23,300. I'll put my stop loss at minus 150 points, that is equal to 23,150. My target should be 24,000. If I include derivatives, then maybe a smaller target at 23,500, but I will not reduce it. I will target at 24,000. What if I am an existing bull? That means I have already long on the market. Then in this case, my stop loss is previous week low on closing value, which is close below 22,450. My stop loss. Otherwise, if it goes up, again I will watch out for what happens at 23,000 and then 23,300. I watch these levels in terms of how the Nifty behaves here, and then accordingly I will book my profit on or loss on these particular levels. What if I am a new BA, I want to go short right now? So my entry point would be less than 2,450, because now this is kind of understandable now, because we discussed level already. So what's my stop loss? I will put it at 22,000. little above like 650. So I'll take a hit of 200 points here. My target would be 21800. I straight away target this, as a level. So I'll make a nice little profit of around 6.5 points here on this particular position. Then the last scenario is I'm existing bear. Then my stop loss is greater than 2300. 230, which is prices are. My targets are clear. One is 22400 and then 21800. I can book little bit profits on around 224 under 450, and the next target I would be hoping for is 21800, where I will decide based on the data that how basically market is behaving, what kind of circumstances we have to basically arrive at the conclusion. What factors can influence market now? First, again, we all know is crude. In international market, so in here, so I'll say a bull, and I'll maybe create a kind of small chart over there for you to understand. So I'll put like crude here. I'll put bull case, and bull in terms of equity bull, and bear case for equity markets. Bull is less than 105 on the Brent. Bear case now is I think greater than 120. Will definitely spiral towards 130, 140 also. Second is US 30-year yield. Why कहते हैं? Why है? I think bull case is anything less than 4.88. Is a bull case. Right now it's around 4.95, 4.96. Anything greater than 5 would triggers a major alarm bell, in the markets. For Indian market, one was USDINR. Bull cases, I think less than 93 is a good thing. BK, I think less than 97. It means that we are heading toward 100. So that's where my risk would be. The market would definitely basically start to feel nervous about it. So whatever these macro levels, if you want to track market from the macro perspective. With this, thank you very much. If you have any queries, please ask. I'm happy to respond. And and let's hope that we all make some money in this market in the coming days. With this, thank you very much. Have a good trading day.